Good morning, everyone, and welcome to Nadex Morning Analysis. It is Friday, April 9th, where we will be looking at some hot spots or potential hot spots in the markets today, just to give you some ideas on where you might want to focus on this sad day. Want to call out that Prince Philip did pass away. So, Brian, I guess we can both offer our condolences out to
99.
folks in the UK. 99. So definitely a sad day. It's actually raining here in the Chicago.
Yeah, it's raining here too.
So
yeah, raining here.
So hey, that makes me think. April
showers bring
May flowers. Yeah.
Yeah.
And then the
Every
question
flower is already blooming here because trust me, my allergies could tell you.
Hey, by the way, what do May flowers bring?
I have no idea.
Pilgrims, man.
Oh, pilgrims. Oh, the Mayflower. Oh, it's a Friday of puns.
You know what? I'm going to start telling dad jokes every day.
I was gonna say.
I am loaded with the dad jokes. So my name is Todd Rich. I'm with Nadex. With me, as usual, from Keep Trading Simple is Brian Caprice. Before Brian and I get into some potential hot spots today, we need to share that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk, and that this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. So the two things I think we can look at today, and it makes sense. One would be gold's been moving. Gold made a move overnight, and then that's also impacting, the reason gold's moving is also impacting the Dow, setting us up potentially for a feel-good Friday. So, I don't know. Let me flip this over to you, and you want to kind of get into what's going on with gold, and then we could take a look at the Dow?
Yeah, so, again, as we're going through this recovery, and again, some of the news this morning, we mentioned earlier in the week that CAD had unemployment change and unemployment rate. They blew both numbers out. 3 times as high on unemployment change. The unemployment rate was supposed to be 8, came in at 7.5, previously 8.2. So huge perk. You can see the dollar CAD is down about 38 now because of the CAD strength. Overall, again, the story so much is always about recovery. I mean, we're you look at some of the latest and hottest news stories. You can see there's a talk about disappointing economic news in Europe, elevated geopolitical risks, things like that. Germany talking about, aid businesses must be provided as long as needed. So kind of things with a negative intonation. But we've seen great numbers in the U.S. We've seen Chinese numbers being great. You're seeing, numbers peak through like this with a Canadian. And again, when recovery starts, the way that we handle this kind of pandemic is we make everything super, super cheap, very, very relaxed. But unfortunately, the flip side of that is it will cause inflation over time. Well, we actually had some news coming out this morning. And again, some of this inflation story goes back up, and you can see it inside of the yen from yesterday. But you can see that the Fed's Clarita made some comments this morning talking about how baseline expectations among forecasts is that most of the early rise in inflation this year will be reverted back by the end of the year. And again, if you remember what Powell was saying, what was it, last week, 2 weeks ago, that we're going to see transient inflation, and the gold hawks have been like, give me the inflation, please give me the inflation, because it's supposed to go to like 3,000, right? And it's not there. It's not even close. Silver was supposed to go to 100. It's not even remotely close, right?
Nope.
They haven't seen it. And he said, I want to see actual inflation, not forecasted inflation, because we haven't seen the actual need to raise interest rates or anything like that. And again, now we're saying that, any of the inflation we see will probably revert back by the end of the year. Now, what is their justification for that? I don't fully know. It's one of those things. As we recover, inflation should be creeping in. Non-farm payroll numbers were awesome. Unemployment rate ticking up could have been one thing as well as again, we are shifting our workforce. But this is kind of some interesting data about it. And, we want the Fed bond buying profile to roughly match outstanding market. Expect the current account deficit to widen in 2021, 2022. It's not a concern. So, I mean, the deficit's not a big deal. They're going to let these things run hot. These are all the ingredients you need to make inflation cake. It's just not there yet. It's not in the oven, supposedly. So this is interesting. And what it's done to gold right now is, because we're not seeing it in any inflation we've seen, Gold is not happy, and gold is continuing to drop down to the 1735 level. Now, here's where we were yesterday, and this is one of those things that goes back. I mean, we mentioned that we really like the level at 1752. This is one of those, another example of how Nadex is such a great option, because again, if we were pushing this in the futures market right at 1752, we did. We chopped back and forth. And is this a true kind of area broken? Yes and no, but it didn't really give much decision. And eventually what happened? It came from that level and dropped back down again. And again, if you guys are not trading the call spreads, this is one of those things that I do like in the call spread area. Why? Because again, it gives us some leeway. If it does go up against us, it doesn't knock us out. But again, it's a timing thing. You got to make sure that you're getting one of the good ones. It's got to be close to the floor or the ceiling. In this case, we drop back, what, at this point, almost, what, $20 already in the overnight from basically 2 o'clock yesterday back down again. So, you know, some great opportunity there. I would see this one probably continuing to push a little bit lower. The retail trader hasn't had the opportunity to kind of take advantage of that news yet. There will be some profit taking. It's probably why you're starting to see it bounce right now. But, you know, I would say that the area down where we've mentioned it before, we've seen seller or buyers come in here. We've seen buyers come in and really kind of put a line in the sand here. Somewhere between the 1729 and 1725 area is most likely where I can see this pushing down. And then again, gold coming down, not seeing inflation, again, rolls right over into the indices. Because again, no rising interest rates means that the market can run hot and then go higher. Because remember, rising interest rates lowers the overall indices. When you don't raise it, then again, they tend to go higher.
Right. They can go higher, right? And by the way, you know, on that inflation as well, if you recall, the last inflation numbers we had, a significant portion of the inflation was all in oil, and
yeah, it was all in gold and oil. Yep.
And oil itself at the time was up at $66, $67 a barrel. It can't get back up through 60 now. So that was a huge component of what was in those inflation numbers. So now when they start taking some metrics with oil lower, the inflation numbers are going to look a little different.
Well, and that's a story of greed. You know, I mean, Clarita mentioned supply and demand. He should add supply, demand, and greed in there, because greed increases the supply, which also lowers the demand aspect of that. Remember, nothing really has changed so much. We're seeing it from everybody. Use caution. I mean, last week, what was it? Kaplan said we need to have aggressive support right now. OPEC's like, hey, $60 a barrel. We got to start, putting the cuts back out there. And again, that's what we're seeing. Their greed is getting the better of them. They're starting to release more out there. It's starting to drop oil back to the downside. You know, it is what it is.
So it just shows how all of this is interwoven together. At least in terms of gold today, it has made. I mean, it made its move. Gold's not having a stellar day here. It's gotten hammered quite a bit. Maybe is it pausing out here? Brian's thinking there's still some downside here, but maybe throughout the day. I mean, gold is moving, so we're trying to just put you in, get you looking at what is moving, where are the hot spots. Binary options could be a way to play this today. Remember, all these are going to go to 100 or 0. I mean, it's either a yes or no proposition. You see gold drop a little bit lower. You'll see these probabilities in some of these drop. But if you think it's gonna, kind of stay above that 1730 level, there's ways to try to play that with the binary options. I mean, you just got to kind of wait and see, right? It's an if this then that situation. But gold is moving today, so something to keep an eye on. Brian, you mentioned how this also is impacting the equity indices. So we know it's hitting the Dow. I don't know if you want to just kind of do.
So I mean, 2 days ago we talked about the Dow spiking higher or lower. Again, the risk was the contagion on this one was FOMC, and we hit low, we came back up high again, and then really there was nothing that changed. It came back down, grabbed that level again yesterday, right at the open, and did nothing but rally higher. Right? We didn't really have too much contagion that we had to worry about. Right now, with gold kind of falling down, you can see lack of really any other news today. Right? I mean, we talk about this about early rises in inflation, which means, again, we'll boil over into, okay, we're not going to raise interest rates for longer. Again, we have that feel-good Friday aspect of this, and this is a 30-minute, but drop it down to a 15. This is where you can kind of see, you got to look for levels of where we had basing pushing off. I mean, you can see that we had a level here, and, this level here has really been kind of touched a few different times. But even on the smaller side, you can see that we had some buyers stepping in right here. You can see we had some buyers stepping in right here. So it's one of those things that there's a few different levels in here that we can kind of take these things off of. Obviously, in the overnight, that starts right here. This is the 3 o'clock European session rise higher. They're obviously doing some profit taking right now, but any type of a push above, and we break above this 33, 490. All of a sudden, it gives us that feel good Friday where, hey, listen, interest rates are going to stay a little longer. We're going to support this. We're going to do this. It kind of has every reason to go higher, right? Now, we still need to play it on a technical basis. And like I said, there will be some profit taking from the overnight. So we may continue to tick down, but we may have a level in here at 33,400. This may be the stabilization point pumping higher. If you wanted to play it kind of in an ultra conservative fashion, you could take a level up top here and say, listen, here was our basing. This is what turned us around. Okay, I'm going to wait for this to kind of drive through and then pull back. I'm probably not that far, probably down to like here, right? Do a little kind of Harry Potter kind of push on this one, right? For something along these lines to go higher.
Yep.
Right? And that's entirely possible. Again, no inflation. There's no reason to raise interest rates. That means we can have an ultra easy and supported, economy. And again, that feeds the Dow directly.
So I do want to, and let's just take a quick peek. I mean, we usually put up the binary options, something to always be looking at, and you're looking at, if it's, once things stabilize, people who made money overnight, right? They're just going to go ahead and take their profits. Particularly
it's Friday. They want to get their profits and go. They want to be done.
And they're right. They want to call it a day. But the U.S. retail trader hasn't come in yet. So binary options could be an interesting way to play this. If you think it is going to end up going higher, there might be some opportunities to pick up one of these. But I do want to take a peek. Let's just see what we've got going on. You mentioned call spreads earlier, and I'm going to take a quick peek at the call spreads. What do we got in here? And there are some call spreads to the upside. You got to kind of, looks like
I think call spreads are great, but it's one of those things that they're not as flexible as knockouts. So there's a time and a place to use a call spread, a time and a place to use a knockout. Like I said, there are more options available, not as in numbers of strikes, but more opportunities, I would guess would be a better word, for knockouts, because they reset as prices going back and forth again. Where once call spreads are printed, they're printed. You can use them or you can't use them. That's it. So there's not as many trading opportunities in my eyes with call spreads. But when
earlier in the week, there's definitely some opportunity. Usually, you got to take a look at what we print on the daily basis. So I just wanted to see. It was worth looking. It was worth looking at that, and I just want to kind of see, are there any knockouts that are up there for the Wall Street 30? I'm just gonna click on any one of them because we can quickly see. Just pick the top, the first one, the highest one. Even these are even a bit away. I mean, it's a Delta 1 product, so if you're looking for it to bounce higher, there is a way for you to. I'd want to take it. I'd pick this one. There is some downside risk, but the whole thought is, from the moment that you buy, you're actually trading the price of the Dow. So if you see it come down in base and you're looking for it to eventually take that bounce higher, you could take a knockout, knowing that if you're completely wrong and it were to wash out, you would be stopped out down below at the lower boundary. So usually worth a look. And a lot of times you got to take a look at the different products, whether they're binaries, call spreads, or knockouts. All right, so those are the two hot spots to take a look at. One, gold. Definitely moving. Not seeing that inflation. Looking for a feel good Friday potentially for the Dow. Looking to set up to maybe close the week on a high note. I don't know, Brian. Do you want to talk at all about the euro?
Yeah, I want to get everybody out of here at 9. Just as a kind of a recap, guys, I want to get you out in the next 30 seconds. But here was yesterday morning. We were sitting down here. And remember, we talked about how the yen was just absolutely slaughtering every other currency, and it did. Here was the overnight. Here was where we were yesterday morning. You guys can see the yellow dot down here. Here was the response back again. And again, we've mentioned this a few times. This is a parabolic retracement. Okay, I did the webinar for Nadex a few different times now. Go to Nadex's YouTube page, or you can search under the archive webinar sessions on the Nadex homepage and just search my name and you'll be able to find it. These are easy setups. And again, this is a nice size rally. I mean, at this point, it's up 97 pips in 24 hours. So again, there's great opportunities out there when you see one price collapsing as fast as it did into levels that, again, we've seen buyers step in. Got to take advantage of those. All right.
I think it's gonna be time to do that. I think it's gonna be time to do that one
yeah,
again.
Probably. So.
Time to do that one again. All right. With that, got any questions for Nadex? Please email us customerservice@nadex.com. We are here to help. Can't help you if you're having challenges and you don't reach out. We can't help you. Brian is also very accessible. Feel free to email Brian, support@keeptradingsimple.com. He is also available to help. With that, want to let everyone get set up for the open in 30 minutes. And want to wish everyone good luck in the markets and enjoy your spring weekend. We'll catch you on Monday, everyone. Thanks. Bye.